Hello everyone. Well, it's clear we shouldn't count the dollar out just yet. The greenback recovered across the board yesterday, with only the Nokia gaining a little tiny bit against it. The shift in sentiment was particularly impressive, given that Friday's commitment of traders report showed that speculators switched to being long euros last week after 5 weeks of being short. The strength of the dollar against all three commodity currencies was particularly impressive, given the continued recovery in sentiment towards China. Now, there wasn't any particular trigger for the rally that I could see. Market reports attributed it to enthusiasm ahead of today's retail sales figures for July. The so-called control group, which excludes petrol stations, auto dealers, and building materials, is forecast to power ahead at plus 0.4% month on month, compared with only a 0.1% rise in the previous month. That figure might reassure investors about the health of the U.S. economy and confirm that the Fed is likely to begin tapering off its quantitative easing at its September meeting. What all this suggests to me is that sentiment towards the dollar hasn't disintegrated anywhere near as much as I had thought after last week's plunge. If the dollar can gain in these conditions, then there's still widespread demand for it, and it's too early to throw in the towel on the long dollar trade. In fact, the pullback from last week could be a good opportunity for dollar bulls to get back in. Elsewhere, outside the dollar, there was little movement. The euro was barely changed against sterling and the Swiss franc. The only other G10 currency making a major move was the yen. As usual, dollar and yen tracked the Nikkei, which rose overnight after the government suggested it might offset a rise in the consumption tax with a cut in the corporate tax. Other indicators out today include the ZEW Current Situations Index for Germany, which is expected to be slightly higher. An improvement in the German indices would tend to confirm that the Eurozone economy is bottoming out and could help to keep Eurodollar near the top of its trading range. Similarly, EU industrial production is forecast to be up 0.9% month on month in June, a turnaround from a fall of 0.3% month on month in May, with the year-on-year rate of change finally breaking into positive territory. This figure would corroborate the message of the ZEW index about the Eurozone economy bottoming, something that we should learn more about tomorrow when the Eurozone second quarter GDP figure is released. And as I said, that sort of figure should keep the Eurodollar at the top of its trading range. Meanwhile, the UK CPI for July is forecast to be flat month on month. That would bring the rate of year-on-year rate of change down slightly. I think that could weaken sterling a bit, as it would mean the Monetary Policy Committee has more room to ease policy. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.